Okay, so let's come back to oil for a moment. The demand for oil doesn't really seem to recover. It's what the CEO of oil giant Shell told the markets recently. Who is driving the oil prices at the moment? Don't you think that the investors buy oil to get rid of their paper currencies in which they don't seem to believe any longer?
Well, I'm sure that's part of it. We've had this reflationary period. It's brought stock prices up. It's brought bond prices up. It's brought commodity prices up. So if someone believes that the reason oil is going up is someone is trading his dollars for oil because he wants hard currency, then he's also going to have to argue that that same person wants to trade his dollars for junk bonds. Those arguments don't work. What's happened is that people have gotten more optimistic over the past 13 months, and this has caused them to do a lot of buying, to take their cash and buy things. They're optimistic the junk bonds will pay off. They're optimistic that the commodities will go up and that the economy will recover, and that's why they're buying commodities and stocks. So it's very simple. It's all the same market, really. They move somewhat differently on a short-term basis, but these waves of optimism and pessimism are in charge. As long as people stay optimistic, then commodities and stocks and junk bonds are going to hold up. When that wave starts down again, as it did in late 2007 into 2008, everything will change, and our conversation will sound very different.
Okay, I want to quickly come to Australia and the current situation on the country's housing market. It is our view that a bubble comparable to the popped one in the US is forming here. What do you think about this?
I'm not close enough. You'd probably have to talk to our Asian analyst to get a good grip on it. But I do know that real estate in Toronto, Canada, and I believe in a couple of other cities, is going to new highs. This is sort of what we see in our stock market because most of the averages are well below the 2007 high, but there's one average so constructed, the value line arithmetic index, that it made a new all-time high a week ago. So there are little pockets that, even though it's a partial retracement rally in most of the world, there are little pockets that make new highs, and they keep people excited. People have to focus their optimism somewhere. So now we have a few pockets, maybe Australia and Canada in real estate, maybe certain stock indexes and so on, that people are focusing their purchasing power on. And that included gold up through December of last year. That's why it went to a new high. But if you look at the breadth of the new highs, they were much greater in 2007, 8, and even back in 2000 than they are today. So the amount of market manias, the number of market manias is thinning with every one of these major tops.
Okay, and China. A lot of people seem to be still bullish regarding the economical development. On the other hand, markets discuss nearly day by day when this real estate bubble in China is finally going to pop. Uh, what kind of effects would that have on world economy?
Well, to me, the China stock market already topped. It peaked out in August. So now it's running only on real estate. If you look back, the same thing happened in reverse in the U.S. You had the real estate top in 2005, and 2 years later, the stock market top. So, as I said, it's really all the same market, but people will shift their focus over a short-term period and therefore confuse people into thinking that these are separate bull markets. So China is definitely a major bubble, and one half of it's already peaked out, which is the stock area. So when housing is done, it'll look just the result will be just as like what happened in the U.S. in 2008 and in Europe. So this is not a place to put your money. It's a place to get your money out as fast as you can.
One more question, really of personal interest I have. Yeah, nearly all international and leading politicians claim that protectionism is not the way how the countries should try to solve their economical problems now. But on the other hand, you hear and read day by day that the trade tensions between China and the US or Europe and China are growing very quickly. What do you think here?
I wrote in Conquer the Crash something that I think has probably been true for thousands of years, and that is that economists and anyone who can think knows that protectionism is dangerous, that it hurts the economy, that puts the protectionist measures in force, not just the other side. It hurts both sides, and yet a negative social mood creates so much anger that people cannot help themselves. And as we get deeper into this bear market, you will see protectionism spring up everywhere, despite the fact that everybody knows it's a bad idea. I mean, most people know that socialized medicine is a disaster, but we passed it anyway. So you can't get in the way of these grand waves of social mood. They're in control of social actions. There's no more social action on earth than a government decision. And when the government gets angry, they're going to start putting on protectionist measures, and you and I will know that they're bad news, and they'll do it anyway.
Last question. Do you think that the U.S. is planning to attack Iran?
They're talking a lot about it. People felt that the new president would have very different policies from George Bush's policies, but almost all of them are the same. He's opening up drilling. That's the latest thing.
Yeah.
He talked about possibly getting out of Iraq, and instead he expanded troops into Afghanistan. So as the mood goes more and more negative, there's more risk that there will be battles and even wars. In fact, the United States marched into Iraq in March 2003 within, I think, 4 days of the bottom of that month. We made a low in October 2002 and then another low in March 2003. And that bottom is when anger was at its peak. In the October low, Congress gave the president authority to attack. And in March, on the second bottom, they decided they would actually do the attack. So as this market goes lower, right now I'm not too concerned about it, but as the market rolls over and goes down between now and the next 6 years, there will undoubtedly be wars springing up. As to where exactly they will spring up, you would have to, use your common sense reading the newspapers to make that decision. But since there's been so much talk about an attack of Iran, I'm afraid that is on the list as a sad possible outcome.
Okay, I want to thank you very much, for the interview, that you took the time, for speaking with us.
Okay.
Yeah.
Well, it was a pleasure speaking with you. You had excellent questions. I was very happy to do it.
Thanks a lot. Thanks a lot. Perhaps we can do it again in half year time.
Yes.
I don't know. Perhaps I can talk to you again, because development goes on, and there we have other topics, other questions.
Sounds good.
Okay. Thanks a lot, Robert. What I do is to wish you a nice Easter weekend. Yeah. Relax and enjoy.
Thanks so much, and same to you. Enjoy your 3 days.
Thanks a lot. Thanks a lot, Robert. Bye-bye.
Okay.
Have a good time, yeah?
Goodbye.
Ciao.
Yep, you too. Bye.